What's going on, Facebook world? I'm here with Chris Rogers from BookWerks. And as you know, I'm Matt Plapp. As you're obviously watching this on Matt Plapp, that would be confusing if I wasn't Matt Plapp. And behind us is what we've been working on. No, I'm lying. We walked in here and that was already there. We don't know what it is, but if it looks like something cool, we'll take credit for it. Chris does accounting for restaurants, and it's a good fit because I work with a lot of restaurants. And we ran into each other and we were talking about some things, and I just wanted to ask him some questions. I wrangled him in here and said, let's go live. Let's talk about some mistakes you see restaurants are making or some things that you're constantly helping restaurants with. So Chris, tell us about you. Tell us about BookWerks.
Sure, yeah. So BookWerks is a digital bookkeeping company. So everything is cloud-based. We're entirely remote with all of our staff, all of our clients. It's an entire cloud-based bookkeeping accounting platform. What we do, though, and clearly what I am, is accounting. We're an outsourced accounting function for that restaurant. And what we try to do is help the restaurant keep score, right? Most individual restaurant owners tend to run month by month on what's in their account, not looking at the data to understand what's affecting my restaurant. What are my costs? How am I going to control those costs? Am I driving sales? What's going on there? We give them the financial statement and help them walk through to understand what's going on a month-to-month basis with their store. If they have multiple stores, we'll do comparatives and help them analyze that from sales to direct costs to labor to prime profit, all the way down to occupancy and operating expenses.
Okay, so let's talk about the top three things you see when you get a new restaurant client. And I saw you were eating some tacos from a place today that was a new client. When you get that client and you get their books, what are the top three things you see that you're like, wow, we can really help you make a difference in your company because we can fix this or streamline this?
First thing we always ask, when's the last time you saw a P&L? 9 times out of 10, it's months. They haven't seen a P&L in months. So the first thing we do is we go back in the current month and we get them a P&L so they understand what it looks like, so they know where the business is today, just from the current month. That's number one. Number two thing that we run into a lot of headaches with clients that aren't looking at is we're not looking at our inventories. We're not looking at our costs that we're carrying in the back room or that might just be walking out the back door, whether it's through waste or theft, right? So those are two big things we see each and every client. And the third one is, when's the last time you reconciled your cash? Cash goes unreconciled for the better part of 6 to 12 months before they ever sit there and say,
explain reconciling cash to me.
I spent money on a check. It cleared my bank account, but I've never looked at my bank account to make sure that it's in balance. It's just like balancing your checkbook.
Okay.
Haven't balanced my checkbook in a year. Those are the three big pitfalls we see on restaurants as we come into play.
It's funny you mentioned the inventory. I had a client of mine, a restaurant, I won't mention the name, but it was something they caught, was that the general manager had noticed that their food cost had went up, and they have a pretty good accounting department, so they on top of stuff, but one of his things he was telling me that he every week looks at, or every line item, food cost, where we at, because the price of certain things change and fluctuate. And he couldn't believe how much his cost on his steaks had went up. And so he went back and he looked, and price of steaks hadn't went up. He looked at his P-mix and he hadn't sold any more steaks. And so he's like scratching his head and, okay, well maybe we miscounted, so maybe it was an anomaly. So a week goes by, it's there again. Second week goes by, he's like, I got a problem. Well, he's sitting in the back one day, he's in his office, and he sees one of the workers carrying a bag of garbage out. Okay, no big deal. He puts the bag of garbage next to the dumpster. And he's wondering, why would he put the garbage next to the dumpster, not in the dumpster? Guy walks by him, and he's like, he didn't want to say anything to him. So he walks out. The bag of garbage was a bag of steaks.
Wow.
So his food cost was in the bag of steaks. Now, I'll say this, one of the reasons he recognized that is that the company he works with has 3 restaurants, and they have an accounting department. Mm-hmm. Actually, I guess they have 6 technically, 3 they own, 3 they run. And the accounting department is really diligent on that general manager's job is to look at these numbers. Well, I know a lot of owner-operated restaurants, they don't have that luxury. They don't have an accounting department. They don't have, hey, you need to look at these numbers every week to identify that. I'm guessing that's something you could help with, or that the numbers you're talking about would help identify those areas.
They absolutely do. And one thing you'll find typically with an accounting firm that provides you with financial statements is you get here you go, good luck with that moment. You don't get that from us. What we do, we end up sending you those statements with commentary about what we're seeing going on there. So, hey, food cost is up 2% over the last month. You might want to dive in to see what's going on there, right? Or beer cost has gone up 6%. What's going on there? Because beer costs typically don't fluctuate that much, right? So we're looking at those types of things for them and giving them commentary around that. And then each quarter, we do a nice video update for them, walking them through a detailed level.
A video update?
A video update.
An accountant on video?
On video.
I can't get restaurant owners on video.
It's pretty amazing. We're pretty progressive accountants in that way. As you see, I'm not your traditional suit and tie kind of accountant.
You don't have the typical Fifth Third suit like we see here in Cincinnati.
No, and actually, I'm wearing jeans today, but I'm a shorts and a t-shirt kind of accountant. So
okay. So let's talk about some of the positive. What are some things you've seen in restaurants when you get a client and you see that they're doing some pretty cool stuff that's helping them run a restaurant better? What are some things you see that you're like, that's pretty neat?
One is just they'll put in control mechanisms, right? Budgets for the stores, right? So whether you have one store or multiple stores, they'll start to actually generate budgets and hold the GMs accountable to those budgets. That's actually one of the coolest things I've seen come out of working with us is now that I have data, I can do something with it. I can create incentives with that and drive accountability down to the store level. Inventory control steps, we've helped implement actual inventory counts and how people can go through in a more systematic way of counting their inventory on a weekly or monthly basis. Kind of depends on everybody's preference. Please don't do daily. That's a little overkill. So those are probably two of the largest things that we've seen. Other than that, just the growth story where we've seen stores go from single store all the way up to 5 stores. It's phenomenal to see that type of growth.
What are some of the things that, if there's somebody that's watching this eventually that's a restaurant owner that's got one store, I have actually a guy in mind I talked to yesterday who's opening a second store here in 95 days yesterday. What are some things that he's going to need to do or know? How does he go from 2 stores to 3 stores? What are some of the key things he's got to be paying attention to get to that level that, we had to give you a good example. Chris and I know each other because he's a member of a gym that I'm an owner of, partner in. And I had a guy approach me 6 months ago wanting to open a second location. And my first comment to him was, I haven't figured out how to run the first location yet. I'm not interested in running a second one and having 2 of them that are run terribly.
Exactly.
So I would say terribly, not run properly as best they could. So what would you kind of give like somebody that's looking, hey, I've got 1 now, I'm going to go to 2. How do they know that they're making the right step? Because last thing you want to do, I see all the time, there was a couple brands, Willie's was here locally.
Yep.
That, I'm not saying that guy's fault, but from what I heard from him and other people was that he went from 1, 2 locations to 6, 7, 8 locations, but they didn't have the equation figured out for 1.
Right.
And so they replicated a bad product.
And that's the key, right? So you have to figure out the first location, and you have to be cash flowing in that first location. So when we kind of look at industry standards, depending on the class of restaurant, are you a pizza, are you a burger joint, are you a taco joint? What are you? We have kind of metrics on where your bottom line should be as a percentage of sales. Are you hitting that number yet? And even if you are, what's your debt load so that you can service that debt, right? If you can't service that debt, you can't open another location because most people aren't going to fully capitalize the restaurant. There's going to be some debt involved, right? So we want to make sure that you can cash flow and support the existing location freestanding in and of itself, and you have excess capital on top of that then to service the new debt, because while you'll have the honeymoon sales period, there's no guarantee that location works out. So can I service the debt on that next location prior to opening that one? So it's effectively 1 store has to be able to support 2 before we open that next location.
Okay, that makes sense. Now, what are some telltale signs that somebody is not ready for that? Obviously the cash flow, but what would be a couple things that somebody might not have their ducks in a row that you might look at and say, hey, this isn't a good idea because of this?
What's your labor cost run, right? And what's your turnover rate look like? If you can't keep people, you're probably not going to be ready and successful in the next location. And that's actually the largest one.
I actually heard that Wednesday from a guy that runs 7 restaurants locally who's a top-notch operator. I mean, the guy is unbelievable. And he made a comment about another chain that's coming to Cincinnati. And he said, man, Matt, he's like, it's a mistake on their part. He's like, there's a shortage of restaurant managers in the city. Mm-hmm. And they're going to come and they're going to open up 6 locations is what I guess they've already signed leases for. And he's like, all of us can't find managers and employees. Where are you going to magically find great operators?
And that's key. The people are the key to those. So if you can't keep the good managers in play, you're not going to be successful opening another location.
Okay. What are some things about yourself how'd you get into this business? What made you start thinking about restaurants, or how'd you go down that path?
I would say it was just kind of blind luck. Ran into one restaurant, and we actually grew quite a bit with them as they grew, and it taught us a lot about the industry. As they went out to raise additional capital, we were there supporting them in that function. So it required us to go out and learn more about the restaurant industry, more about the business, not just oh, hey, I'm a fast casual place. We had to understand how fast casual competes with casual dining, how it competes with fine dining, and understand all those metrics inside of there, because we're going to go out and raise capital, and there's different valuations on these types of businesses. That was really what got us into it, was one location that grew and grew, and now over half of our practice are restaurants.
So you're probably similar to me in that when I started my agency, not that everybody can see this good stuff. This is Chris and I were here talking about this, and this is the back end, a spreadsheet, a Google sheet for our restaurant program and the dealings that we have with restaurants. And I've got many, many of these that we use to analyze and structure what we do. And it was kind of wild because 4 years ago, my agency, at one point, we had 34 clients from 31 industries. And my biggest struggle, and I didn't realize it then as much as I do now, was I would leave Jeff Weiler Automotive, who was a client, and I would go to Quaker Steak and Lube restaurant. Well, nothing from either one transferred.
Right.
No knowledge. Man, this killed it here. It didn't do it here. And I would leave them and go to GNC nutrition stores. And I would leave there and go to my gym. And I remember sitting down with a consultant of mine named Billy out in California. And I said, Billy said, Matt, you're good at a lot of things. But imagine if those 34 clients, imagine if 31 of them were restaurants, or in that case he said breweries. Imagine you had 31 breweries. Mm-hmm. Every one of those that you had this data on, you could figure out how to transfer it seamlessly and grow them consistently and predictably. I would imagine you're probably pretty similar in that you can all of a sudden take that data from at restaurant one, and when you meet a new client, hold on, Dad's behind the camera, show me something. Cross-pollination. There you go. My dad's giving me some lingo from behind the camera. And he's live at 4, by the way, with Fire. We're going to interview Gerard Norman and see how to help close more deals and prospect better as a salesperson. But now you're able to cross-pollinate because you've got data, like when you get a new client that, let's say, for example, is a pizza place, like Rapid Fire Pizza, and you're working with these 5 and these other 3 need help. Well, you've got the data. You know where they should be, where their metrics are.
And we're able to use that data across the platform without using one store, one particular client against another. We have the average aggregate across that platform and say, here's where you are compared to your peers, right? Here's where you need to improve, or here's where you're crushing it.
I remember when one of my biggest regrets in life was Dad and my brother owned a boat and RV dealership, and we were at our peak doing $15 million a year in sales. We grew from 0 to $15 million in 4 years. And that was big because the average boat dealer back then was about $2.5 million in sales. So we grew way too fast. Mm-hmm. None of us we were all marketing and sales guys. So we had to spend a lot of money to fix a lot of issues every year. But the one thing I used to go back on, I remember sitting there in front of Mercury Marine one time, and we were a big client of Mercury, or a big customer of theirs. I said, man, do you guys have any data that shows what a $15 million boat dealership like us, what should my payroll be? What should my floor plan interest be? What should my rent be? No, we don't have it. And it was one of the things I think back on. Like I've actually got a lot of friends in the car business now. And if you're a Chevy dealer, Chevy tells you, hey, if you sell 105 cars this month and you guys make $400,000 in gross profit, next month your expenses should be here.
Wow.
And so I wouldn't say it's impossible, but it's pretty damn hard to fail at that level because unless you've got a gambling or drug problem, you know where the money should go.
Yep.
And you're kind of bringing the same thing to the table, that you're able to sit down with restaurants and say, hey, you're a fast casual, or you're even a restaurant that's within this franchise organization.
Yep.
Here's where your numbers should be from what we've seen good operators. Here's what bad operators can be. And here's the trouble areas.
And we actually love franchise systems because we're able to take the aggregate data across the board and say, here's where you stand, right? And typically the franchisors like having consistent, equal P&Ls across the platform as well. So it works really well for both sides of that coin.
Well, cool. Well, how can people get a hold of you?
You can reach me directly, Chris at bookwerks.io. It's BOOKWERKS.io. Yeah, we're an IO because we're an input-output company. Or you can call me at 859-630-5491. That's my direct line. Or you can text me there as well.
Yeah, and I'll put a link in here to your website. And if you want to reach him, let me know. And I plan on bringing you on a little more often because we share a similar niche. And the more data, the smarter each one of us get, the better we'll be.
Appreciate it, man.
Cool.
Thanks.
See y'all.